Hello traders and Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. It's the 22nd of October and we've seen a rally, a big rally in all the equity markets. And we're looking at the Dow Jones right now, and you see the lows were just below 15,900 and we just zipped right up to almost 700 points. Is it over? That's the question on everyone's mind. So let's do something I think would be very helpful to this situation. First of all, looking at our trade triangles, they're negative. The monthly and the weekly still negative. Okay. The tool you want to use is the Fibonacci tool, which is right here. You click once. You click on the very high point, drag it down to the lows, and you can see that we're just at just over a 50% retracement. Possibly can go to 16,778. That would be a 61.8% Fibonacci retracement. That would be a perfect retracement in Fibonacci terms. But right between this level here, 16,650 and 16,778, that's where I think the market's going to have hard slogging. So let's see how that plays out. Looking at the S&P 500, we're going to put the same tool on this market. Go from the highs, click once, drag it down. You can see we're actually at that level now. So the market, in our opinion, should probably have some problems right around these levels. Now, not to say it's going to collapse again, go up again. It's just going to get more of a trading range, which is what our tools are telling us on our trade triangles. It's minus 55, indicating a trading range. Even though we have the long-term trend, according to our monthly trade triangles, is down and the weekly is down, this sharp recovery was a combination of bargain hunters in my mind and short covering, and it was pretty dramatic. I think we can all agree on that. We'll do the same tune with the NASDAQ, and that is we're going to take our Fibonacci tool, click from the highest point, which is about here, drag it down, and you can see we're right in that zone, 61.8%. So I think the NASDAQ and the S&P are probably getting close to where they're going to have some resistance and more of a two-way market. Again, it's a 55, minus 55, indicating a trading range. You can see we've just barely crossed over the 50 line, indicating that the trend has once again started up. Not so sure about that. I'm going to wait for our trade triangles to kick in and tell us what they want to do. But right now, I think at the moment, be nimble, be quick, but it's a trading range. Now the dollar index has had a wonderful rally. You can see it just kept going up and up and up. This pause period that we see here is really just a pause that refreshes. And if you look at what's going on in terms of the RSI, you can see quite clearly that the RSI came right back to that support line. We've talked about this before. The 50 RSI is just right here, found good support, and is off once again to higher climbs. And I think this turn right here is indicating just a simple line like this. Boom. We sort of climbed out of it, and I think we'll take another shot at this 86.50 level on the dollar index. And you can see right here the symbol is DX. You also have our trade triangles with a perfect 100 score. Now a lot of people misunderstand these trade triangles. When they're 100, it means the trend is very strong to the upside. It doesn't mean necessarily you should buy at that particular time, because it can obviously at the very top right here you're going to see the trend's going to be 100 and then it can reverse. So you need to pay close attention to the other trade triangle, which is the early warning system, which is the weekly one. When that kicks in, you want to be out of the market. This is particularly true in equities. Now gold is interesting because we have a score of 60 plus 60. Again, it's moved into a trading range, but the reality is it has made the turn. We use the weekly, as you know, for timing purposes, and that's long from 1234. It's 1243 now, so it's about $7 profit in that position. And then we use the daily for timing purposes. So 1244.90 was the last signal we had on the daily, so it's a little bit below that, so we still want to be a buyer of gold at this point. You can see we're over the 50 line in the RSI, indicating that the trend is on the upswing. So it's something to look at, and I think that's a good omen for gold sometime in the future. Now crude oil has been under a lot of pressure. It's still under pressure. Minus 90 indicates a strong downward trend, but we sort of flattened out here just for the last several days. And in fact, let's just put a candlestick chart in and let's draw this a little closer, maybe 3 months. So you can see we've really sort of been tightening up this whole thing. And normally what happens if you see a situation like this type of pattern, I'm just going to draw the pattern for you. So it's almost like a continuation pattern. You get this sort of triangle formation and then pops down, downside in this case, because it's a continuation of the bigger downtrend. Remember, we have all of our indicators. Minus 90 is a strong downtrend. Nothing has reversed this situation yet in crude oil. How low can it go? Well, I think it could definitely, not definitely, that's a too strong a word. I think it could go under the 80 level and maybe the mid 70s. We'll see how things shape up. But let's go to the two markets we want to talk about. First of all, Apple. As Carl Icahn said, this is a no-brainer. And you can see how it turned around quite dramatically. We have a plus 100. We had a buy signal. You can see yesterday that came in at 102.38. Market's 103.72, so you're buying it just a little bit higher if you buy it today. But this is new highs for the move, folks. I think we're going to see this market continue to go higher. I would not be surprised to see us go to the 110 level on an interim basis. The trend is clearly up, and if you scope this out just any time of distance, you can see that this period of September through really the period of almost all of October has been sort of sideways. I think the big game changer here is going to be Apple Pay, which I think could be very, very big for Apple and also for consumers. But again, they came up with the iPhone 6 and 6 Plus, very successful. I stopped by the Apple store and they can't keep them in. And I think I know the people very well there, so they were telling me the absolute truth. So let's go on to our next market. Now this is something interesting. We've never looked at this stock before. It's called Allergan. AGN is the symbol, and one hedge fund manager, I'll tell you who it is, owns 38.5% of this stock in his portfolio. So if he's betting very big on this. Something's going on here. Now look at this market, scope it out, and you can see the pattern it tends to go. It has a sideways, boom, up, sideways, boom, up. We came back down, tested the line right here at 170, and then we're going back up again. I think we're going to see this stock at $200 a share. And the standout feature to me also is the fact that when it pulled back, it really stopped right dead in its tracks. And the dead in its tracks is right here. Look at this line. Every time it's gotten down here, you just follow this up like here, and follow this up and so forth. You can see it's made a turn. So I think that's a very, very important feature. The monthly came in at 174, and that's a standout feature. We think this market can go higher, and I'll scope it in closer so you can see the formation. Highest close we've ever seen in this stock is 190.30, and I think we're going to see that blown away as early as this week. So let's see how things work out. Hey, I'm Adam Hewison. Check out Apple, new highs, all-time highs, and check out Allergan. I think you'll find those both to be winners for you. Good luck.